Raamdeo, thanks so much for joining me today. Really great having you. It's been a tough year for the market. A lot of global headwinds, a lot of frustration internally. We've given negative returns in dollar terms for the year. Ahead of Diwali, what's it looking like to you?
So I'm always optimistic, and so is the situation now. Because you have to understand the current situation. This is not every time it is new, and this time again, it has its own flavor of what it looks to be very slow and widespread disappointments, global challenges, but there are companies which are doing very well. So what has happened is that for the first decade belonged to the commodity boom, global commodity boom. The oil and whole lot of things, they went almost 5-6 times in 15 years. From $25 oil in 2002-3 went to $120, $130 and created a global crisis. Iron ore from $20-25, nobody knew what the cost of iron ore is, went to $180 and again back to $50. So I think that was an era of commodity boom. After 25 years, commodities came and they redefined the entire what growth means, what the global economy means. It was all over China. Okay. So now China emerged. It has become very large economy, almost as big as America or maybe a little bit smaller than America. That was, and in that environment, you made some money and wins and losses, whatever. I think second decade is redefined again by completely different phenomenon. That is a collapse of commodity prices. From oil 110 to 50, iron ore, again, everything is now fallen to the ground absolutely. And again, I think we are back to 90s and all, where nobody wants to talk about these commodities. Now, this kind of readjustment is very unsettling. So in index or in the companies, there are a lot of large companies like ONGC and Tisco and Vedanta and CAN. So all these companies, they are getting hurt. Obviously, they'll get hurt. Yeah. So their earnings are going down. Now, there is another set of companies which are big beneficiary of the same trend, like automotive companies. Their raw material prices are falling. Power companies, their coal, gas prices are falling. You look at a whole lot of consumer companies, automotive companies, all the raw material prices are falling. Inflation is low. So we have to look where the opportunity is, which way the wind is flowing, where exactly the corporate profit growth is happening.
There is a negativity that's come into the entire conversation on the markets. The euphoria of the Modi victory, the sweeping victory that he got, hasn't translated into real reforms. Are you disappointed, or do you think it's something that will have to take time?
I think a lot of reforms have happened, and we can see in 16 months only that much can be done, and particularly with a very strong opposition and upper house not having majority, and so it has its own limitation. But look at whether it is road sector, whether it is the ease of doing business, and as I said, all the states are vying for this thing. Look at the power sector. So every sector, aviation, telecom, all the policies have been announced, and we don't see any favoritism to anybody. It's all, clarity is there in whatever is happening. So I am not disappointed at all. I am disappointed with one thing, where the leader of the, say Prime Minister or BJP in their own style, they have raised a lot of expectations. And actually they have done very well by any standards, but they have done much worse than what expectations they built.
Sure.
So I'm looking bad because I'm looking unhappy. What is the definition of happiness? Definition of happiness is you promise X and you deliver 2X. Okay, they promised 2X, they delivered 1.5X. So it is looking negative. And that's what is a disappointment.
Okay. Let's look at the two pillars on which an economy thrives: consumption and investment. Both are not happening. Both are looking sanguine. What do you think has gone wrong? Why is the economy not being able to pick up, Raamdeo?
I think consumption side, consumers are doing their best. Whatever little they have, they're just blowing
But only in pockets. It's not been overarching.
Yeah, if you look at the more recent trends in automobile demand, from where first level of discretionary spend starts, this month we saw 23% growth. Industry-wide for the month of October. I agree that it's not a boom time, but it's not bad. Things are picking up, in the consumer side.
But FMCG companies are struggling. They have to spend even more on advertising. We saw the numbers from Titan. We saw, yes, automobiles are doing well in October, but largely because of also the pump up that they have done in terms of new launches, advertising, etc. It's not looking as though people are dil khol ke going and spending. That's a problem.
Yeah, but because investment growth is not there, job growth is not there,
Yeah.
the slightly lower inflation is there, economy is stable. I mean, this 7.5%, I don't know how they calculate, but we don't feel 7.5% kind of
Sure.
growth across.
That's exactly the point.
Whether it is a cement demand, whether it is a power pull, this thing, credit growth or automotive demand, we don't see 7.5% effect. So we have to check with the economists how they calculate that. So it must be a different way of calculating, because I think they've changed the methods. So that's the missing point. I mean, I would think it might be 3-4%, 5% types, where things are not going down, but things are also not flying. That's the kind of situation right now. As far as investment is concerned, I don't think private sector is queuing up to do up infrastructure projects and all, because they have been hammered so badly. So those guys, they are already in bankruptcy. Till they come back, I don't think you see a fresh this thing. So you have to find government investment coming in, or foreigners being invited, and government helps them to invest in the country. But I think the biggest challenge will be really broad-based investment cycle to start.
Okay. How far before earnings come back also? Because the commentary on the earnings has been terrible. I mean, look at a Larsen and Toubro. It was a darling of the brokerage houses 4 months back.
One single company which redefines the investment cycle in the country is L&T.
But when do you see a pickup, and what do you make of the commentary?
Yeah, so I was going through some data yesterday. For 4 years, 2,000 companies starting from 94, they are same 2.5 lakh crores profit for last 4 years, and the current year also is looking to be very, very flat. So whenever it happens, it happens. I don't have any view after how many quarters is going to happen. One thing I know, right now we are stagnant. I mean, some companies are winning, some companies are losing. So you can realign your portfolios on the winning side, but clearly a broad-based recovery. Like what happened was, after 4 years of stagnancy, 2000, 2001, 2, and then 3 or 4, it just took off with a 50% growth in 1 year. 50% growth in 1 year. So because what happened was, corporate profit to GDP, that's one number. It just keeps going down, and that time it went below 2%. Right now it's about 3% here. So it kept down, and then it shot up to go to 7.5% in next 4 years. And that was a bull run we saw between 2003 and so that's not out of the memory. We want the repeat of that.
But do you think, what are the factors which will indicate a repeat of that? If you were to look at early signs, what should investors be watching out for?
Then it is very difficult to really figure out. We go company wise, and then these things happen. I mean, I have seen 3-4 rounds of this. In 92 we have seen, then 2000 we have seen, 2007 we have seen. Globally something happens. Now it's a global village. I mean, the entire Indian economy is global economy. So something will happen. Maybe investment cycle will pick up, or world will decide to invest in India big time.
But,
I don't know what.
All the growth cycles, the rapid growth cycles, Raamdeo, have happened with easy money, global liquidity,
which is there,
and global growth. Now, liquidity might get tightened because of QE being withdrawn, and growth is sanguine. So in the backdrop of that, in the global environment, can the Indian economy really pick up, you think?
So you have to work double, in the sense that one is that you get tailwinded growth, which happened between 2003 and 8. We did 8-9% without doing any reforms, real reforms or anything like that, structure adjustment. Nothing we did. We just grew at 8-9%. We thought we have birthright to grow at 8-9%. No. When the global economy slumped, we slumped more than that. So the issue is that is the world economy going to come back? It's a very complex affair. I don't have any view, but I see one thing which will probably become the biggest thing, which will pull out the world economy out of the shell, is the collapse of commodity prices, energy prices. They have become very, very low. The inflation is not there. All central bankers are printing money. So someday the investor, consumer and investor will, animal spirit will come up, and people will start consuming a lot more, and hence investment cycle will pick up.
Okay. So in India's context, you think the next couple of months are going to continue to be tough?
It's going to be almost same. I don't see...
stagnancy is what we're going to... Possibly,
yes.
For how long? How long do you see that happening?
Listen, I mean, there is nothing like a vertical kind of thing happening right now. So it may be even 4 quarters. I don't see any sign.
So do you think it'll get worse from here, or are we in the bottom?
It's improving for sure. It is improving for sure. But we don't see a rapid improvement, because if the cement demand is not growing, credit offtake is not happening, mean, what kind of investment cycle we are talking about?
We finally started seeing the transmission of rate cuts by the banking system.
Yes.
You run a very, very aggressive housing finance company, Raamdeo. Do you think that is going to egg up consumption and demand and investment? Because every time our economy has also gone up, it's only also one of the big factors has been interest rates coming down.
Yeah. So on monetary side, monetary policy side, I think we still have some space left, and we have a brilliant central banker, I mean, who has helped kind of give stability to the currency, global currency, which is more important. So that has been his first priority. After stabilizing that, I think his new challenge is bringing growth back and how monetary policy can engineer a growth in India. So that thing is work in progress, and how fast we can get to sub 5% kind of interest rates. I mean, this continuous fight, what is the inflation rate? Is it -4% or +4%? So I think the truth lies somewhere in between. I think, and he knows it better than anybody else. I'm sure at some point of time, monetary policy will be fully used to bring back the growth in the economy.
Let's talk about where the growth is happening. You run a fund, multiple funds, and I think they've done very well, beaten the index. But where have you found growth in this current stagnant environment?
Yeah, so we go company-wise. I mean, we don't look at any sector for. I mean, we are not excited about any sector per se. So we are not top-down, big picture guys. Though we read everything, but I try to see. I mean, where is that interesting situation where growth is imminent? I mean, where the competitive advantage of the company is so massive that even in a, say like aviation is a dead and out, I mean, most godforsaken kind of a business all over the world. And Warren Buffett has made it that, I mean, don't even come close to airlines and all. But that's the one sector which is growing at 20%, 25% plus in the country. I mean, the whole railway has collapsed. I mean, the first class and air conditioning. I think Rajdhanis and Shatabdis and all, I think that's not the most preferred now
option,
mode of transport. So everybody's flying around, and it's a large country, and so you cannot fly enough. There's so many marriages, people, a drop of a hat, they travel across. So I think, so there is a boom out there. Now you have a wonderful company coming in here, which is world beater, which has a huge competitive advantage. So one is the industry is growing, and this company is gaining. In 6 years, this company from nothing has got 35-37% market share. So while everything is very dull, something is happening here.
So like that, of course, yes.
Yeah. So like that, one by one, you have to pick up. I mean, say like United Spirits. I mean, the party is yet to happen, but still party is on. So there is a change of management. They are their volume is not growing much, but say they are doing a lot of brand renovation and upgradation of the brands. After a lot of underinvestment, they're cleaning up the entire mess and building one of the finest company in the world. I mean, Diageo of India. So, I mean, we think that party is yet to happen. So this ultimate consumer company which is being built, whether it will build or not, only time will tell, but you have to have patience. So like that, you have to position one by one.
So you're saying don't look at sectors per se, look at individual companies.
Yeah, say automotive. You look at Maruti, it is growing at, top line is growing 15-17%, but bottom line is growing 50-60%. And markets love the earnings growth, not so much the top line growth.
Okay. The other interesting bets that you have made is on HPCL, I know, because it's partly. Now, the restructuring and the reworking of the entire subsidy issue, that's been a big structural change that people haven't. And look at BPCL, HPCL, these have been multi-baggers in this kind of market. What are the other areas where you see a positive structural change happen?
This is a huge problem. One is the policy change. Second is that collapse of the oil price. Sure. So what has happened? Till about 2000, I think 2002, do you know 50% of all the corporate profits used to come from oil and gas? You may not be aware of this. I did the number yesterday only.
Really?
Yes. Out of total 50,000 crores profit, 26,000 crores came from the oil companies. And they were reduced to nothing. Now we earn 4 lakh crores. They were making nothing. They were living off grants by the government. Pay some dividends. These are the largest businesses. HPCL is 2 lakh crores top line. BPCL is 3 lakh crores top line. IOC is 5 lakh crores top line. So all put together, it's 1 million crore. There is no more business, no bigger business than that. And they are the consumer businesses. Day in, day out. Sardi, Garmi, You need oil all the time. So now there is a policy change. So the moat or the franchise of these companies, they had become invisible. They were always there, but they had become invisible because of regulatory overtures. The
Sure.
compulsions of the government. The oil policy, it destroyed the companies, it destroyed the government fiscal also. Now with the collapse, government has come to senses and they are saying we will never go back to this. So my sense is the moat will be rebuilt and these companies will get their glorious days.
Sure. The other area is the FMCG consumption basket. There has been a rural slowdown, Raamdeo, and that's really hurt a lot of these companies. How are you juxtaposing that slowdown with your investment thesis around this?
Yeah, so that's very challenging because these are fantastic franchises with long-term growth of 10, 12, 15%, but the valuations are running like 40, 50 P multiples. So even if on the exit you get the same P multiple, you still make only 10, 12%.
Sure.
So that's why we have to keep looking for the spots where something is being rebuilt. Say, we talked about United Spirits. So that's also they don't have much profits right now. So if you look at only P multiple, it might be running it to maybe 100 or something like that. But if you look out 5, 10 years when the company will be fully rebuilt, I think then things will become much more reasonable. So you have to buy something which is little handicapped, which is at least looking to be handicapped today, looking very expensive, but you have great faith that these companies will be rebuilt. So you have to start looking some opportunities like that. So it's not going to be that easy because right now the biggest challenge of managing portfolio is that quality and growth is globally popular and they are very expensive all over the world. So how do you position a portfolio with a reasonable P multiple? So your work is like 10 times more.
Fair enough.
So you have to run a very focused portfolio of 15, 17 companies, which gives you full benefit of diversification. Yet it is not so diversified that you can't get enough good companies. In the name of diversification, don't put a junk company in the portfolio because that itself will do the damage.
Okay. In terms of sectors, companies, what are the themes that you like over there?
We just talked about, today, the way things look, all the modes or franchises are available around pharma, which is not only about Indian pharma, but exporting to the rest of the world. Because I believe that story could be as big or if not bigger and more profitable and more stable, predictable than IT also.
Right.
So yeah, so pharma has a big future. IT in any case is going to be big, is big already. Then you have domestic sectors like automotive, which is going to be a significant beneficiary of commodity collapse and the under-penetration of the autos. Then you have your specific sectors like oil marketing companies. Then you have consumer companies selectively, wherever you can find spots. Then you get some monopolistic ideas, some specific ideas. Say in logistics you might get something, or you have to find those few companies, which is very unique to your knowledge, your interactions with the market.
Let's talk about money flows, because Indian markets will always do well only when there are money flows. 2015 was a year of domestic flows and domestic investor becoming the bigger and the more substantial player. My two questions are, first, are you seeing a slight slowing down of domestic inflows? And B, how do you see this trend really gaining momentum over a period of time? So
clearly, till about December 13, we were struggling with the net redemptions. Then suddenly, I don't know what happened, from January 14, slowly the inflows started happening. And then it has been relentless and it has been growing. And then in 2015, sometime in, I think start of the new year itself, April, May, June, it just started becoming very big, very aggressive. And we saw the peak in September, August. August was the highest. Then September and October, they are not very bad, but they are kind of 30-40% lower. So the month which concluded, October, is somewhat slower than even September.
Sure.
But it's still not bad, I would say. Still, domestics are coming.
August, September was a period of a lot of global volatility, and because of the China scare. My question is that post that, how have you seen how do you foresee the FI portfolio changing? There is a view that India is outgrowing the rest of the EMs, and hence there is going to be a lot of activity over here. But a lot of sovereign funds have been selling EMs, and we've suffered because of that. How do you see the kind of balance coming through?
Shorter term, it is very difficult to predict, how they will be. First thing is, I'm not catering to them, so I'm not.
Yeah.
I don't know their mind. I also see in the evening what have they done. So my sense is, for the companies which are doing well, will find enough FI money also. Say like you see the IPOs. I mean, whether it is Indigo IPO or there is enough appetite even today. I mean, somebody wants to build a book on some of these good companies. You find enough buyers any given point of time. So I think finding FI money for good companies is not an issue. But broadly, now they are very important part of the Indian market. They own up almost 20-22% of the market, almost 50% of the float of the blue chip companies. So clearly they are the people who are going to decide the short-term levels of the market by their inflow or outflow. But even the current year, which has been much smaller than that of last year so far, I think we do about net inflow about $5-6 billion in the current year compared to $20-25 billion last year and the year before. As the economy picks up, I think we'll again go back to that $20-25 billion kind of thing. So I don't have any clue to what is going to happen about their flow in next 1 month or 2 months or 3 months.
But you see,
but the longer term,
you can't
India is
argue with
clearly
it.
standing out. I mean, I meet so many people. I clearly see India is standing out. But I think we are suffering because we are categorized as a emerging market, and emerging market except for India, whether it is South Africa, Brazil, Russia, China, Indonesia, I mean, they are not in that greater shape. So we are suffering because of the clubbing.
Last question, Raamdeo. Outside what you do in the markets, you also have a very interesting private equity play. So I'm going to ask you, where are the opportunities emerging over there? Because Indian industry is actually very vast. Even the stock markets don't cover it. They cover a very small portion of it. Where are you seeing value?
Yeah, so in fact, that segment is far more exciting because we are looking at small companies. You are buying for 8-10 years. So we know if these companies do well, we are going to make money for sure. And we are not under pressure of, I bought it X price, so tomorrow it is minus 5%, minus or 10%. So, but there I think we don't do tech, we do all non-tech. So at times you don't get good flow of companies, but we are seeing enough flows. So we are clear about, we are focused on the pharmaceuticals. We want to invest in consumer. We are looking at very special companies on NBFC side also. Some banks now, these opportunities have come. So maybe so like, this is how the opportunities come. So now banking license have been given. So many banks will go for IPO or some private equity or something, will have an opportunity. So when we do 12-13 companies in a fund, which has a 2 years investing cycle. So every quarter, one investment and one divestment. So I think that's a far more...
Okay. Last question. As somebody who's, watching the markets, what is the biggest opportunity, one single opportunity, and what is the biggest challenge in the coming year? As I'm always optimist, so I see only positives this thing. There are always challenges of finding the good ideas. I'm quite sure a lot of companies are going to make a lot of money. Whether I get enough companies in my portfolios ahead of the growth. That's the key challenge. Okay, so timing is the key challenge.
No, not timing, just coming across idea. There is an error of omission, there is error of commission. So, I mean, the ideas when they walk in, whether I have sanity to buy and buy enough of that. That's the key thing. I am quite sure hundreds of companies will go 100x, 1000x. Incidentally, Infosys went 6,000 times in last 20 years. So there will be many more companies which will go 1,000 times in next 20 years. The issue is I need to get 1 or 2 of them in my portfolios.
And looking at your track record, Raamdeo, we've always managed to. So we'll be watching out for that. Thank you so much for joining us.
Thanks.
Thanks.
In association with Binani Cement, for generations to come.